So obviously we're working insurance sales, so we get paid fully commission. There's no W-2 job, there's no benefits to it. You're 1099, fully self-employed. I'm going to now break down how pay works, how chargebacks work, and how investing works. In simple terms, if a client is paying $100 a month, times that by 12 is called the annualized premium. That's what you get in the first 12 months. So 100 times 12 equals $1,200. Okay, so they'll pay you a 9-month unsecured advance. So what that means is you get 75% of that up front when you're at a 100% commission rate. If you're at a lower percent commission rate, you just do the math to it. Simple math, 100%, so easy. So times 75%, and then you would times that by your comp. So I'm not gonna put the 100%, but it says right there. That would equal $900 deposited to your bank account the moment the client makes their first payment. So you get paid $900 up front from that, simple math. So whatever the client is, $50, $80, $200, $200 a month, you do times 12 equals your AP times your advance plus your commission, or times your commission, and that's how you get paid into your bank account the moment the client makes their first payment. All right, so remember how I said you get the full, all right, so y'all remember how I said you get the full 12 months, which is why it's called your annualized premium. You get 75% up front. So on the back end, called 10, 11, 12, you get the leftover 25% every single month. So for this one, it'll be $100 a month 10, $100 a month 11, $100 a month 12. Is how that symbol works for 10, 11, 12s. And that works for however much they pay. They pay $500 a month, you get 500, 100, etc. So just in case if that was too confusing for you, in simple terms, month 1 paid $900. Then you fast forward 9 months if they stay on the book of business. Months 10, you get $100. Months 11, you get $100. Months 12, you get $100. So remember, you get the 75% up front here, and then you get the last 25% on months 10, 11, 12. So now I'm gonna talk about chargebacks. Chargebacks happen when the client cancels, okay? So the insurance company advances the money. Now on whatever month they cancel, they're gonna ask for the remaining money back. And it doesn't mean you have to pay out of pocket right away. You simply write new clients and it pays it off immediately for you. Or if you want to, you can simply pay the money the insurance carrier paid you and pay it right back to them, so you don't have a negative balance. So clawback, chargeback, same thing. So let's say month 1 you get paid $900, and then let's erase this because you won't get this if they cancel it. And you can also rewrite the client too and get it back on the book of business. But let's say you can't do that, etc. So let's say for simple math, because I'm not good at math, if they cancel in month 6. So right here, you got paid $900. Month 6, they cancel. So that means 7, 8, 9, and 9 are not paid. So you will have, if you got paid $900, you will have basically a $100 chargeback for each month. So you'll only owe them $300 for the chargeback. And simply, you write it off. Now, if somebody canceled right in the first month, within the first 30 days, you will actually owe the full advance back. Even if they made the first payment, after 30 days, you'll owe it back. Month 2, you'll owe back $800. Goes down the line. Pretty simple. In more simpler terms, whatever month they fall off at is the months that are left over is what you're paying back to month 9. So if it's month 2, etc. All right, so let's say they make it past this part and you get paid $900 and they're at month 11, okay? At month 11, if they fall off, but they made it past the 9 months, you got paid your $100 a month 10. All that simply happens is a month 11, you just won't get the $100. You get to keep whatever it is, there's no negative balance. You just don't keep your renewals there on that part. That's it. Now, after 12 full months, you got paid basically your whole $1,200 in the first year. Now what's gonna happen is you get paid for these clients for life as long as they're on the book of business and they haven't passed away yet. So after 12 months hit, on months 13 plus, and for the remainder of the life of the policy, you get paid a certain percentage of the monthly they pay. So remember, they're paying $100 a month. Let's say you get 3%. So you're getting $3 every single month per client after month 12. So now if you build your book of business up, every single month you're getting $3 per client. If we do 100, what is that? $300 a month? So that's simple as that. You do 200, do the math. You can build that up to where you're getting paid residual income for the rest of your life that they're on the book of business. Now, there certainly are team bonuses, personal agent bonuses that you'll get from the IMO directly. and the carriers will actually pay you bonuses too, just from just producing. You also get like team trips. There's carrier trips you can win too, so you can make all the money and go on trips. Usually a +1, all paid for by the carriers, so you get all that included too. If all this sounds good to you and you think that you can actually do something like this, plus if you haven't seen my videos on Instagram and my YouTube shorts, it will show you me actually in the field selling. If this sounds like something that you feel like you can do and you can meet the 4 criteria to join my team, apply with the link below and I'll call you soon.